The Australian government has just dropped the 2023 federal budget, and I'm here to explain all the key changes that will affect you from a tax and super point of view. Let's start with the instant asset write-off. Everyone knew this would be a big talking point, this budget. I've been talking to a lot of clients about it as we've been leading up to this time, and the $20,000 limit is back. So small businesses with up to $10 million in turnover will be able to instantly write off any asset up to $20,000. Now, of course, there'll be some little caveats about this, and you need to make sure your asset is eligible, but I'm assuming the basic rules will be, again, that it needs to be installed and ready for use by the dates. So at the moment, this has been announced to go from the 1st of July 2023 to the 30th of June 2024. Now, this is a big drop off from what we're currently allowed to do, where pretty much because of the temporary full expensing, we can claim any asset. So we've got no real limit on that value, whereas now we're dropping down to $20,000. So this is going to be a big impact for small businesses that have previously been buying vehicles, for instance, instantly writing them off. Most vehicles are going to be over that $20,000 limit and will fall back under the depreciation rules. So this is quite a major change, but I was expecting this, and we're kind of going back to what our rules were pre-COVID days. Now, the small business energy incentive are for businesses with under $50 million of turnover, and it's an extra 20% deduction on eligible purchases, which is all about increasing energy efficiency for those businesses. Now, this is up to a maximum of $100,000 of expenses, so the maximum bonus tax deduction you can get from this is $20,000, and the savings will obviously be less than that because they'll be based on whatever your tax rate is. Now, I'll bring up here what I've been able to find about this, and it's saying things like electrified heating and cooling, more efficient white goods, induction cooktops, and installing batteries and heat pumps. I think this is a really good idea because it brings forward people spending on those types of things. It's also going to hopefully make people more energy efficient, better for the environment, better for people's pockets at the end of the day. I think it's probably a good scheme. I get worried with these types of schemes about the tracking of it and how it flows into the tax return, so we'll wait to see how that works. Now, of course, we've had rising energy prices, and that was a big focus of this budget, and there's relief on the way for small businesses and individuals. So for small businesses, they'll be able to access up to $650 in energy bill relief. I'm yet to see the eligibility for that. And then same for eligible households will be able to access up to $500 in energy bill relief. I believe the eligible households is pensioners and potentially those on concessions. I'm not sure about the small businesses yet. They're also going to be looking at $1 billion worth of loans for people that are looking at doing double glazing, solar panels, and improvements to help with energy costs. This is all about long-term investment in hoping to reduce energy consumption or reduce energy costs in the future by using solar panels and all those types of things. I think it's, again, a good idea, but it's going to see a long term before some of these effects happen. So people are going to have to spend to save. One of the other key things they've announced is a reduce in the increase in pay-as-you-go and GST installments. Now, this is only for those that are on installments towards their GST or to their income tax. I don't see many people on GST installments. But for those that are on the PAYG installments, normally these increase each year. They're cutting the increase from 12% down to 6%. So they still will increase based on your tax from the prior year. They go up, but they're only going to go up by 6%, not 12%. So it's just going to relieve a bit of cash flow pressure. It's going to mean you're going to pay less in installments through the year. Now, if your business obviously increases or your earnings increase, then it could result in a bit more of a shortfall next year. I think it is a good idea, but you want to keep on top of this. If your installments aren't going up as much as what your business isn't growing or your earnings are growing by, then be where you may end up with a shortfall at the end of the year. Now, this one was already talked about previously, but it's the change in the way earnings are taxed on super balances. Now, this only impacts super balances over $3 million, but the tax on their earnings is jumping from 15% to 30%. So at the moment, it's only going to impact those that are on higher super balances. Now, we have to see how this unfolds in the long term, because balances are going to keep growing. Obviously, with inflation and things like that, our balances are going to keep getting higher. And even though they've said this isn't going to affect a huge amount of people at the moment, if they don't index this, it could become a major issue, I think, in the future. For those that are balances under $3 million, the tax on earnings remains at 15%, so no change there. One of the major changes announced in this budget is the timing of payments for super starting from 1st of July 2026. So from that date, businesses will have to pay their employees super at the same time they pay their wages. This is a major change compared to the quarterly method that we have at the moment. So in essence, you're going to get paid your super and your wage at the same time. Now, from a cash flow point of view, this is going to bring payments forward for businesses, but hopefully make it easier for them to manage this by paying it on a regular basis. I do see clients that struggle with the lump sum super payments, so hopefully this will make it easier for them, even though it is going to bring forward when they need to pay this. This is great for employees though, because you hear of way too many cases where super isn't being paid to their employees. So now people will be able to know that their super should be paid at the same time as their wage. I imagine we're going to see a major change in how software encounters this. And I imagine we will get to the point where businesses will be able to press one button and their wages will go off to their employees and their super will go off to them. And I expect in the future we might even see pay-as-you-go tax being sent straight to the ATO at the same time, but we're yet to see on that. Now, there were no changes to the stage 3 tax cuts, so this still will remain in place where we're going to be abolishing the 37-cent tax bracket, lowering the 32.5 cents down to 30 cents, and then expanding that bracket from 45,000 up to 200,000. So no changes to this. This is still all going to go ahead from 1st of July 2024. Overall, it's a pretty quiet budget on the tax and super front. There's no changes when it comes to personal income taxes at the moment, and the super change doesn't come in for a few years. I don't think it's going to impact the everyday person too much from a tax and super point of view. Small businesses, even though it sounds positive with bringing in an instant asset write-off, they are impacted a bit compared to the current rules. So that might change a bit of tax planning in the next few months, or people potentially bringing forward these purchases before 30th of June this year. I want to hear your thoughts. Let me know in the comments, what do you think of the budget, especially on the tax and super ramifications? Before you leave, make sure you've hit that subscribe button, hit the like button, and go and check out some of the other tax-based videos I've got on my channel. I thank you for watching. I'll see you over there on the next one.